Morning, traders. Gates W. Adams here with the Trader Bacon Show. And welcome back. So glad to be back in here with you guys. Just want to share a couple of great highlights. First and foremost, as usual, we will be giving away 3 evaluations for Apex Trader Funding from viewers of the show. You should see the link there in the comments for the form here in just a moment. So make sure you get that filled out and get your chance in for that. I want to congratulate last week's winners, Peter, Sue, and Randy. I am going to try not to butcher anybody's names, so we'll just go with that. But right there on the screen, so congratulations to last week's winners, and make sure you get your forms filled out for this week. Winners will be notified by email by the end of the week, and make sure that you have all the information that you need to get that all set up. I did want to take a quick moment to just highlight the fact that yet another big milestone for Apex Trader Funding in terms of paying out traders. Over $165 million paid to traders. It's just amazing. The amount and the volume that is just on a consistent basis paid out to traders. In fact, averaging over 20 million a month for the last 3 months, over 66 million in the last 90 days. So exciting stuff there. If you ever wonder if traders are making money with Apex Trader Funding, they 100% are. So anyway, got a great show for you guys today. I've got Derek from here in Texas with me, another local Texas boy, going to share some insights with you on today's episode of the Trader Bacon Show.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now.
Derek, Mr. Lock and Profits. What's going on, my man?
Everything's going well. How are you this morning?
I am doing great. As I tend to do on Mondays, I cut my trade a little early this morning. Looking over, it wouldn't have quite hit profit yet, but I don't like being in a trade when we get going live. So took a nice little green day today, and I think I'm going to go ahead and just sit with that, man. How was your day today?
You know, about the same. I did a little bit of work this morning and didn't quite get to my targets. Only like $20 across all the accounts. But at the same time, I wanted to stay green because the worst feeling ever would have been engaged in this conversation with you and panicking that, I'm in this trade. What am I going to do? So for that reason, I cut it short also, and maybe I'll engage again later. But for now, let's talk markets.
Awesome. Yeah, I didn't want that tape. You're about to profit taken in the background as I'm sitting here live. So yeah, man. Well, first of all, Susie and Peter, of course, winners from last week's evaluations. Great to see you guys there in the chat, and John, for sure, glad to see you in here live. I appreciate that, and you guys make sure to check us out live. That's when you get to win the free stuff. That's always a lot of fun as well. All right, Derek. So let's talk a little bit about what you've got going on. So now, first of all, let's talk a little bit about your history and background. How long have you been trading at this point?
So at this point, I'm getting close to 20 years. I didn't even realize it, but I got started from a good friend of mine and realized he's been doing it about 25 years. And I got started a little bit before the recession. So I traded during that time when we were tanking, and I started off with stocks and options mainly, was not trading futures until, this last year. And that's been my experience. I did it for several years, and then I reached a point that I could do it for a living. And I had varying degrees of success over the years. I mean, major home runs and major drawdowns, all part of the learning process, And
absolutely. Now, as you've gone through this journey, obviously you've traded a variety of different instruments, and obviously at this point you're trading futures. What is it that you see? What do you like about trading futures in particular versus some of the other instruments that you've worked with in the past or even currently?
Well, one of the main things is the volatility, and I say that from a positive standpoint because, as we know, in order to make money on a trade, whether you're going long or short, you need it to move. Sure. And the one thing about the futures is that the overall markets do move. Some, of course, sometimes faster than others, but you can get yourself involved in a stock that hasn't moved in weeks. Right. And it's like watching paint dry, and don't create an option because you're watching it, just decay on you.
Whereas not a lot of day trading in the equities side of things. At least it depends, obviously, on the stock. But I'm with you. And in fact, it's gotten to the point where, like, I trade NQ. I've talked about that multiple times on the show. I know a lot of people love ES, and ES to me, because I've traded NQ for as long as I have, it just seems so slow to me. I can't even imagine some of these instruments that move even slower. Now, of course, I'm a day trader. I've got to close all of my positions by end of day. So that obviously changes the dynamic of things. I've never kept trades overnight. Like, I don't think ever in my history. I've always operated under this format. But yeah, man, that volatility definitely creates opportunity as long as you know what you're looking for. So now, as you've gone through this journey, what has been your educational process? What have you done to learn what it takes for you to be successful?
That's a really good question. So one of the things I look at when it comes to trading is that, kind of like with any profession you may be in, continuing education, right? So you start off, you learn one thing, then you realize there's a problem. So the way I go about continually educating myself is figuring out what's wrong and then looking for a solution for it. So, without getting into all of the things I trade in my long-term accounts and all this kind of stuff, to talk futures and Apex trading, I learned, okay, I'm blowing out evals. That's the problem. How do I solve this? What am I doing wrong? And the next thing I knew, sizing is what became like a huge thing. So then at that point, I'm reading books. I'm figuring out things on the platform, talking to other traders, learning from more experienced traders all the time. And what ends up happening is, like, it's like we're all on a tier. Maybe I started years ago and I'm up here, but there's a guy who's been doing it even longer that I'm learning from. And then I can turn around and pay it forward and teach someone who doesn't have the same experience I have as well. But we're all constantly learning. To stick back to what you were asking, read a lot of books, from Trading in the Zone to what's that one? Well, just so many books, reading the charts. I used to be in a chat room with a guy named Sam. I learned a ton from him. I subscribe to a newsletter with this guy Mancini, and he's absolutely amazing. Reading his newsletter every day actually is extremely helpful in keeping the mindset for trading. And
so in the mindset of continuing education, we all know that there's just such a vast amount of information out there, from books to podcasts to videos on YouTube, to courses, to mentors. And the reality is that for the most part, now there's some stuff out there that's just garbage, but for the most part, there's value in every take, and of course, every trader, every teacher, every video's got a different take on this strategy or a different take on that strategy. For you, how do you filter out the things that become overwhelm and simply focus on things that elevate where you currently are? I know that for me has been a little bit of a struggle as I've kind of gone back to the beginning, and I've really had to narrow down what it is that I focus my attention on, because there's too many shiny objects over off in the distance that will take me away from what I'm currently focused on. How do you keep that from happening?
Right. So the thing is, it actually takes experience and being hands-on to keep that from happening, because, like you said, there's so much out there. You got one guy who's saying, hey, throw your charts away, don't even look at them. You've got another guy that's saying, the only thing to pay attention to are your charts. Don't worry about the news. Don't listen to anything else. Stay laser focused. And then the next thing you know, you need to try to find out what works for you. So in my case, to answer your question, I had to find a balance through trial and error. That's really the way. I mean, you're learning by engaging in the markets, giving it a shot, getting one of these evals and saying, okay, let me see what works, and then weeding out what doesn't and holding on to what does. And that's really, in my opinion, the only way to figure that out is through trial and error, because if you're not testing it, and we know with traders, we do that all the time. People talk about back testing strategies, using different software that allows you to back test. You have to give it a shot, in my opinion, to weed out what's valuable and what's garbage,
I think that's just such sage advice, simply because it can get so overwhelming. And like I said, anybody who's been trading for more than about 5 minutes has experienced this. There's just so much information. Well, do I focus on supply and demand? Do I focus on trends? Do I focus on indicators? What do I focus on? And for brackets, thank you, Crow. Yes, there's so many different things that really can tell a different tale. And me, I like liquidity. I like supply and demand. I like swing highs and lows. This is really where I focus my attention on over the course of the last several weeks, and it seems to be working pretty well for me. So when the Crow comes in and tells me, "Hey, we look backrest, not brackets," and so I have to force myself not to get too engaged in things that are just a completely different concept that will take away from what I'm trying to focus my attention on, and just work on things that are building into that. So now that said, everybody's got a different mind, a different idea of what works for them. Mm-hmm. And so at this point, why don't we take a look at what's been working for you? Because obviously at this point, 20 years, the experience that you've got, we've got some things that are working. In fact, I think you mentioned you're trading for a living at this point. This is what you do, right?
Yes.
Well, let's have a look, man.
All right. So like if you take a look, I can give you an idea of what I do on a daily basis. The first thing is trading, like, you have to think of it like a business. It's not just something to take a shot at. You really want to take it serious. With that being said, preparation. So the night before, I'm reading that newsletter like I talked about. Every single day, I'm going into TradingView and I'm realigning on my 3-minute chart, which I use for entries and exits, where support and resistance lines are. I'm labeling those. This is really a job. I'm not just taking a peek. I'm labeling these things. I'm going on TradingView. I'm putting horizontal lines in. I'm color coding them. Is this a major resistance line, or is this just a regular support resistance line? I do have a supply and demand on a Lux algo on the chart, so I kind of have an idea, and I'm also watching RSI. Now, for a lot of people out there who...
Hi, everyone. I'm just going to jump right in here real quick. My name is Millie. I'm the producer. Derek, sorry to interrupt you. Your screen stopped sharing with me, so
really?
You could just present that. Yeah, if you just present that.
Okay.
I was
a little technical difficulty here, guys. But yeah, hi, everyone. Good morning.
Okay.
Good morning, Malia. Welcome to the show.
Just wanted to drop in here so that we could show Derek his wonderful screen here.
Okay. Second. And
there we go.
Are you able to see it now?
Yep, here we go.
There it is. Okay.
Wonderful.
Yeah.
Little technical difficulty there, but yeah. So if you guys can see that screen, so basically, like I said, I use TradingView. Now I actually execute my trades on TradeAvate because I'm able to do the copy trade, etc. But like these different lines, these are major resistance lines. Regular support lines, supply and demand. So my daily, scenario is I wake up, I've already put these lines on from the night before, the support and resistance. I'm going to check the economic calendar, right? You can see here, I'll go in and see what's for today, upcoming today. Do we have data? Of course, that's important so you don't get whipped. And then I always throughout the day, keep an eye on the heat map, because some people, they say, oh, only charts. Others are saying only the news matters. I actually am a hybrid between both. I'm a person who believes that, the charts can tell you what they want, but if news breaks that, there's a war breaking out, or that there's a company has gone bankrupt, whatever, that's going to move the stocks. You need to take that into account, in my opinion. Some people don't pay attention to it, but I'm sharing, what works for me. The other thing is when I look at that heat map, like I just shared, that gives me an idea of the overall sentiment. Are we in, a drifting easy market? Are we in a overly red market? There's some days that I look at the heat map and everything is red, but the market's up. And right then, that's my key. Okay, this can't sustain. We're not going to stay green. This is a great opportunity to get short the markets, because every stock that is that's the underlying indicator of what the market is all red. So, right. And the opposite, or everything's green, but the market's down. Okay, great dip buying opportunity, whichever way you look at it. I feel like that kind of helps. The other thing that I also do is because I take the approach that I don't know anything. I don't know what the market's about to do next. I don't know if data is going to drop. I don't know. So for that reason, I control what I can control, which is the size of my entry, when I enter, when I take profits, etc. So a lot of what I do with that is I don't try to just guess, okay, here's the level to buy. Maybe we squeeze and go higher. Maybe we, reverse and go lower. So I kind of let the market automate that process for me by using trailing stops or even hard stops sometimes to make my entries versus just engaging. That's been extremely successful for me lately. And even though the numbers that I play with are much smaller, hey, $50 a day, $100 a day. Today I'm only up $20, but the beauty with Apex is but that's multiplied times 20 accounts.
Right.
And I've had these conversations with some of my friends, and I'm like, and a lot of them, because I've been doing this so long, they're already very established. They're older, they have money, they have their large accounts, and they've been trading, and what they're doing works. And they're saying, well, why do you see any value in using the prop fund? And they're saying the same to me. Hey, you already have an account. You're already trading. You've got your interactive brokers and you do your thing. And I'm like, aren't you getting the concept of 20 accounts?
Well, you and I had the conversation the other day, and I know for me, when I size up just a little, it totally messes with my head. When you see that P&L number that's bigger than you're used to right. Me, going from 1 mini to 2 minis last year, I had several of them, but my first complete meltdown in the charts last year was simply the day that I moved to 2. And for me, I now trade 5 accounts. And so copying that across 5 accounts doesn't mess with me the same way as sizing up the actual position size. I don't see it. I know it's going on. I mean, it's just tricking myself, so to speak, but it does allow me to spread out that risk, and it does allow me to manage what I see so that I don't get too deep into my head, which is anybody who's been watching the show for a while knows I'm prone to do. So,
right. And then imagine this, even once, because like you said, it's mental, being in 20 accounts and trading 1 contract is the same as trading 2 full-size contracts, right? But the thing is, if you actually keep it comparing apples to apples, then the reality is once you have created a point where you've built your Apex accounts up to the same size as, say, your personal, you built $100,000 up, to actually work with, and you're trading the same size, then it's still multiplied by 20. So like you said, so much is perspective, but then there's just a real beauty in being able to multiply it that way.
I love it. Well, let's take a look at some of what you've got going on here. So when you're actually looking to get into a position, I mean, is there a specific trigger that you're looking for, or do you have a variety of different entries that you operate from?
Right. So if you look, I just switched the screen over and I'm showing you so this is on TradeAway. This is where I actually execute the trades, right? Okay. So what I'll do, I'll have, like you see behind me, I've got the 2 monitors. And what I tend to do is I'm watching the information over on TradingView, then I come over here to execute. Of course, I'm not going to do it while we're live, but I will do it for example. Let's say that I'm here and I'm thinking, okay, market's getting toppy. I want to take a short, but I don't know if it's ready and maybe it's going to squeeze. And I'm looking at this volume profile and, I want to give it some time. I don't just want to go short right here because maybe I get hammered, right? So what I'll do is I'll let the market tell me. I'll come down and say, let me go ahead here and put a sell stop in, and I'll do it for fun, right? I put a sell stop in. So now I've got a live order down here that's trailing up. So when the market reverses and it starts going down, it's going to engage me. And as soon as that's engaged, let me go and move it. Cancel it. And as soon as it engages me, then you know how the NQ loves to move.
Right.
A couple of ticks later, I'm throwing a stop on to protect it and seeing what I can scalp. Now, the other thing, and that's going whether I'm long or short. The other thing that I like to do is I like to chart the ES, but engage the trades in the NQ. Because what I've noticed is that they pretty much move in tandem. I mean, we've got such heavyweights in tech right now that, if Apple, Microsoft, we know the Fantastic Seven or whatever they're calling them these days, if they're moving, the NQ is moving pretty much the same as the ES is.
Mm-hmm. And you know what? You and I talked about that the other day. You're the first person I've ever heard who's done that. And it surprises me because, yes, while we definitely see them moving in conjunction with one another, I know one of the things that I like to do is, see that confluence as a trade, as an indication of of things are moving in the right direction. Whereas you're actually taking that as a trade trigger. And so, I love seeing the different dynamics of this, because clearly this is working out for you. And I know that you're not just looking at ES to make a trade on NQ, but I love the dynamic and just getting that different vibe there. Now, you talked about taking scalps. Are you specifically looking for a certain move or a certain target? Do you have a specific stop that you generally use? How do you operate your trades?
Right. So one of the ways that because of coming and having a history in, equities and options and so forth, one of the things that I don't like as much are just the hard stop losses, right? Mm-hmm. Because I look at it as that's the wrong question. And, I don't mean the question you asked. I'm talking about people in general when they say like, well, where do you put your stops? Well, I think it's not really about the stops. It's about how do you manage your risk? Because if we were trading stocks, you might say, I don't have any stop losses in. I bought some put options to protect my portfolio. Or right. I'm hedged this other kind of way, right? There's so many other ways to manage your risk. So now when we're talking about futures, what I realized was, hey, the easiest way for me to manage my risk is just to size way down. Mm-hmm. Because if I'm trading one micro in Q, every tick is $2. It would have to move. I mean, in order for me to blow out a $1,500 PA, it would have to move something that it never moves in a day. So right. For me, I'm saying I want to give myself enough room to be right. I want to give myself enough time to be right. That's kind of like one of those things that carried over from trading options. I used to say, go out another week, give it a little time, that kind of thing. Give yourself time to be right, because for me to act like I know the next exact precise move in the market, I'm not that good. And I do know that there are plenty of people who are, out here who are. I mean, I know people who are buying max contracts and getting 2 ticks real fast. And I'm saying, hey, good for you. I can't take that kind of risk. It's, it works 3 or 4 times and then you get blown out because, oops, it didn't do what you wanted it to do.
Exactly.
But so the answer about the stops, I'll engage and not put a stop on, but it's not because I'm being reckless. It's because I've bought 1 contract. So I'm actually being extremely careful, because I'm saying, okay, this does not put me at risk of blowing out. The odds of me blowing out with 1 micro are very, very, I don't know what kind of news would have to hit. Right. And so that's,
I don't know, man, election season's coming up. Well, who knows?
Yeah, I know. Right. So that's kind of the way I go about that, only because it's giving me room to not have to be that precision, super technical trader, and more so identify the range, more so identify the sentiment on the day. I mean, how many days do we have when we're up in the morning and we just know we're going down today, or we're down in the morning and we know, hey, we're going up today. They're buying the dip. This is what's going on. And all of the move is just noise. Well, right. If you're setting tight stops, you can get stopped out multiple times or burn through however many trades you give yourself to take per day, and you've lost for nothing. Yeah. So size down and give yourself some room. And that's kind of how I go about it. I definitely keep it simple. I'm not big time. Oh, we just got the VWAP and we just did this. And I know that works. I'm not knocking that for people. I'm just keeping it into what works for me.
Exactly. And Steve, to your question, that's just, I think what Derek was expressing right there is that he doesn't have a specific take profit or stop loss. He lets the dynamics of the day, go through, so that because he's sized so far down, he doesn't have to have a specific stop loss that's going to take him out. At a single micro, he's got enough buffer for the market to move and then come back if it does in fact go against him before he ends up taking a profit. So at this point, obviously, and I say that what I just said with a fair amount of caution, because if I tried to use my intuition, so to speak, to say, I think this is what we're looking for by the end of the day, I'd probably be in pretty big trouble. And it sounds like there's a certain amount of intuition that goes into your decision-making on your trades. Could you expand a little bit on that? Because I think that's a misunderstood concept in trading.
Absolutely. So this comes from years of screen time, right? So of course we can all be wrong, or we'd all be mega rich, right? I'm not, coming off like, oh, this is just the hidden sauce. But what I will say is that over the years, I've developed kind of a muscle memory and kind of a pattern recognition for kind of noticing which way we're going. And that comes from not just being focused on only the chart. That comes from, like I was showing you earlier, that comes from saying, hey, let me take a look at the stock heat map. Okay, well, how are we looking today? Okay, we're kind of just meandering. That comes from looking at my watch list. Hey, what are the major stocks doing? Let me not only focus on the ES or the NQ, but let me actually pay attention to what are stocks actually doing. Now, I know for some out there, they're saying, duh, obviously, but I'm telling you, I know some people who they have the blinders on and they're like, I don't want to see anything other than this chart. And, I don't care if Apple's up 6%, I'm shorting the market because this line. And I'm saying, yeah, I don't know. Apple's got a pretty strong weighting. I'm not shorting anything if Apple's running hard. So it just depends. But that's kind of where that intuition comes from kind of paying attention to all the moving parts and seeing how they've worked together before, taking a look at, hey, what's the TLT doing? Hey, what are gold and silver doing? All of those things, what's the VIX doing? And those things all kind of play into me having, I guess you'd say, just making a decision on what I believe the market's going to do for that day. And I believe that I've been pretty accurate with it. Making my assessments of the markets, those actually aren't ever my problems. My biggest problems, like I said, when I started with Apex, was not getting the sizing together, not being able to stomach being wrong, because we're all going to be wrong at times. But once I got the sizing in order, the assessment of the market and making a directional call, that really wasn't a problem.
Well, and I think that you kind of express what a lot of us see from the more experienced traders that have maybe guided us or that we've watched over time is you can look in a very quick moment, say, hey, my expectation is that the market's going to do this. Now, you're not always going to be right, but you're right enough to be a profitable trader. Exactly. And for those of us who are still fighting the good fight and trying to get to that point, it seems almost, I don't want to say magical, but yeah, it feels like there's this intuition sort of side of things. Well, that intuition comes from that experience. That intuition comes from looking at this and seeing this take place over and over and over again and studying along the way and learning concepts along the way and never letting yourself basically get complacent. You talked about, continual education. Well, here you are 20 years in, consistently profitable, trading for a living, multiplying your results by 20x, and you're still going through these processes. And I think that that's a critical part of the trading journey. I don't think it's one of those, I think it's a journey that never ends because the dynamics of it just constantly change.
And, if I can add a few things to that too, the other thing is, get in and get out, less is more. I believe that if you sit there and you watch the screen, so at the exact same time, while I'm saying that, years of screen time has created, kind of a muscle memory, I'm also saying that kind of once you get there, don't sit there and watch the screens all day because they'll hypnotize you. You will start seeing setups that just aren't there. You'll start seeing things that just don't exist because you're almost forcing it. And, my biggest advice, get a hobby, be able to say, okay, I'm walking away like I've hit my targets or I didn't hit my targets, but whatever, I'm coming back at it tomorrow. I'm going to garden. I'm going to build furniture, whatever it is. That's kind of stuff I like to do. I'm going to do something other than stay engaged in the screen because it will suck you in and then you will lose those profits.
I can't tell you how many traders I've talked to that they got into trading because they wanted the lifestyle. They wanted the freedom, the flexibility. They wanted to travel. They wanted to do whatever it is that they wanted to do at any given time. And then all of a sudden they become successful and they spend 10 to 12 hours in front of the screen.
Exactly.
So they forgot the whole reason they wanted to get into it in the first place. And I know that part of the success comes from that, but there also has to be the payoff. And I'm a big believer in, take your carrots when you can. And I think that's something that a lot of traders forget because it's just too easy to just get sucked in, as you said. It'll hypnotize you, and all of a sudden the day is gone. And it's like, oh, well, maybe I should have done something different today.
And then let's talk about that empty feeling when you blow up, like when you get it wrong and or you go down the rabbit hole, you lose control. I mean, these are things that people forget to talk about. And, I don't mind mentioning them because I'm fully transparent. I mean, I went through hundreds of accounts to get to this point right now. I mean, because from the beginning, I saw the concept of, hey, if I have 20 accounts and can multiply a small effort, then, hey, this is going to be, really, really lucrative. But the problem was, from the very beginning, I said, okay, well, I want 20 accounts. I'm blowing them out 20 at a time. I mean, before I know it, I've really only lost 5 times, but that same 5 losses is multiplied by 20. So it's like, you've gone through 100 accounts already. Oh, you've gone through 150. And so it was really a journey of saying, okay, let's get this. But the point I was trying to get to is that empty feeling, that, in your gut, what was I thinking? What was I doing? Why didn't I stop? Right. Even some PAs, I remember having PAs qualified, like they were all above, everything was all above the 25-1, then the 26-6. So everything was like payout ready, and then blowing them out before taking the payout. And, you're just sitting there like, what was I thinking? So there's a lot. I mean, there's so much that goes into staying calm, staying focused, following your rules. And, I guess as much as I can talk about the entries, the exits, and finding your sweet spot, I think that more important than anything is finding that self-control.
I love it. Hey, I don't mean to cut you off, but we are a little over. So I want to make sure that, first of all, thank you so much for spending your time with me today. I know we had some great comments in there. People very much appreciating what you were sharing. I know I certainly did as well. For the rest of you guys out there, definitely come back and check us out next week and have another great show for you. For those of you out there, don't forget to call your moms this week. Mother's Day coming up on Sunday. And I'll see you guys on Monday.
Take care.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid,